what I love about the US, that if you prove that you're good at what you do here, you will find other people that will support you. And it will not really matter how old you are, how many years of experience you have, what kind of degree you have and whatnot.
Not having a degree has not impacted your career.
No. Street smart matters more than book smart.
Do you think human investors and traders are always going to be able to compete?
I think,
What advice would you give young people?
show up, work your fucking ass off, ask for more work.
What kind of technology trends do you see?
I wouldn't tell you because I want to build them.
Hi, this is Matt Cheung. I'm founder of Work in Fintech, and today we are delighted to be joined by Leif Abraham, a serial entrepreneur who's currently co-CEO and co-founder of Public.com, which is a 6-year-old social investing platform that's raised nearly $400 million. Last year, they doubled their revenue and their assets under management, and they're on a mission to make the stock market more accessible, educational, and community-driven for a new generation of retail investors. So thanks for joining us, and let's dive in.
Cool. Nice. Thanks for having me, Matt.
So obviously you're doing a lot in the world of fintech, but can we rewind back to where you started out? It looks like in your bedroom with a successful business. And can we talk about how, what the journey was from the beginning, and actually you went into some other industries before coming into fintech?
Yeah. I don't know if you got that from some other podcast or something, the bedroom reference, or if that was completely random. But so I would argue that career, so to say, started from my kids' room, building websites about video games in the end 90s, beginning 2000. And it was essentially, I just taught myself some coding and some design and started to, build sites around things that I was interested in, which as a child means video games. And that's kind of where it started. And then I had like a lucky hand in like affiliate marketing and a bunch of weird sketchy ways to make money on the internet. And I started funding these fan sites for video games that were run by children like myself that didn't necessarily have the money to pay for servers and such. And, servers were very expensive at the time and things like AWS didn't exist and so on. And so I literally bought servers that were like physically in like a little data center in I think it was Nuremberg in Germany and such. And then I basically gave people free, space on these servers and, and bandwidth and whatnot in exchange for the placements of all the advertisements. And that kind of turned into like one of the largest like ad networks for gaming websites or like video game websites, in Germany at the time. That was like my very first kind of forte into, at the time I wouldn't call it startups because I had no idea that that's what it was called. But I think nowadays you would call it to be like the first startup. And that was like the first kind of, forte into stuff. But yeah.
And are you still a gamer now? If you have the time?
Once in a while, I play some Call of Duty, but just campaign mode and whatnot. And I went, I grew up on PC games. And so like I did Counter-Strike and stuff like that growing up, right? And now I'm just sitting on like a PlayStation and, that's why campaign mode is the thing. Otherwise, I will, be like, I will completely suck. And then, my son will now completely kill me in Mario Kart, which makes me proud and disappointed at the same time. But, but other than that, there's not much video games anymore in my life nowadays, sadly.
Maybe one day. So, and then where did you go after that then? So what happened after that first business?
Yeah. The funniest thing was like at the time, all these fan sites were run by essentially like different clans they were called. I don't know if they still call it that nowadays, but it was basically like, if you were like in the Counter-Strike clan, some other one, and they had their own communities and their own bulletin boards and whatnot. And they started to hack each other's websites just as like a fun thing, aka my servers. And I'm not a DevOps person at all. And so it cost me a ton of money to like get these servers back up and running again and whatnot, because, some teenagers were hacking each other's, websites and stuff. And so someday, like from one day to another, I was like, you know what, screw this. I just shut it all down. And I started working at like an ad agency, because I did all these, a bunch of design, coding, and whatnot, and they built out their digital departments, and so I started working there. And that was then like my first full-time job, essentially. And that's also like what brought me to the US, like working in these companies and such.
Okay.
I always watch out with that, because whenever I talk about having been a creative in ad agencies, I feel like that will completely shatter my my credibility as a tech founder. But that's what I did for a few years, and then from there I went back into Stanford.
To the US from Germany, then, because presumably you've been in the US for like 20 years or something now.
Yeah, close to, yeah, exactly. I moved here in 2008, so was that 17 years or something? Yeah, I mean, it was great. I have to say, what I love about the US is that it leads with a lot of optimism, and that from a cultural perspective, it is much closer to a meritocracy than Germany is. And that if you prove that you're good at what you do here, you will find other people that will support you. You will, people will be around you and cheer you on and so on. And it will not really matter how old you are, how many years of experience you have, what kind of degree you have, and whatnot. It's a little different in Germany. It's changed maybe a little bit in the last 20 years over there. But like when I was there, it was very much like you have to put in your time. People are in positions in their jobs because they've been in the company for 20 years, not because they're the best at what they do. Failure is something that is looked down upon, not something that is looked at as a step to success. And so on. And, and therefore things like, I don't know, what credentials you have, how old you are and whatnot actually mattered a lot, at least at the time when I was there. And so, I, started working, I did the website stuff literally as a teenager, and then I started working at that agency when I was like 17, 18 years old. I was obviously the youngest kid in that company. And it was great that I was able to do that, and I'm very grateful for that. But, it would have taken me a lot of time to get to the positions I was able to get to in the US way faster, based off, working hard on merit, versus, sitting on your ass for a certain amount of time and putting the hours in to, kind of be able to get to where you want to go. And so I think that is something that I just really, really love about the US. And it's one of the reasons, not necessarily why I came here, but came here because the opportunities were great and awesome, and the market is bigger, and it's the major leagues of business, I would argue. But as I was here, I more and more really, really appreciated how that kind of positive vibe, so to say, it's just awesome. Yeah.
And so presumably then you didn't go to university or college, you went straight into working.
No, I actually did go to design college, but I left it a year in to then started that company. I always sucked in school, and I was able to start early at college because I did all this other, design and, internet work before. And so like that gave me access to that college, sooner than some other people. But I hated the theoretical work. Like basically putting in a bunch of hours without actually building anything out of it. It was just not for me. And so like, that's why I then, started working at that agency. And I was still enrolled in that college for like 2 more years while I was working. And there's a story where they had their intranet like built, by some partner school they had in China. And that thing completely crashed, and they didn't know how to set it back up. And so all the credits were lost. And so technically speaking, they couldn't prove I didn't go to class for 2 years. I was like, anecdotally, everyone knew I was not in class for 2 years, but technically speaking, they couldn't prove it. And so I was just like, let me just like press this button to like pretend I have all the credits and, apply to like do my last, like, it's not like a master's thesis, but like this last project you have to do to get your degree. And that just flew through. And I think they kind of closed their eyes and was like, okay, whatever, let this guy just get it done. And so I actually ended up graduating with honors, even though I haven't been to class for 2 years. So I got the degree, but I didn't really go to class.
Amazing. And presumably then not having a degree has not impacted your career whatsoever.
No.
Although you had a degree.
I mean, I had a degree, but not having moved to class. Yeah. No. I mean, obviously, like if you want to be a doctor, you have to, learn how to operate on a person and whatnot that. So it doesn't apply to everything. But in business, I would argue street smart matters more than book smart. And I personally see, a lot of people kind of run against the wall because they follow this path of the book smartness, where it's like, I'm going to learn how to be really good in school. I'm going to learn how to ace tests, and I'm going to get all the badges and whatnot. And I'm going to, do my Stanford. Then I'm going to go to Meta, and then I'm going to do Google, and then I do Stripe, and then I have the perfect resume. And I'm going to be amazing. And then I'm going to work at a VC firm after that. And if you want to do that, all fine. I don't know how fulfilling that is or how much value do you add to the world, but all fine, all good. Knock yourself out. But I would argue that most of true success, which also just not success in terms of financial success for yourself, but also success in terms of building something and like making something of yourself, is way more connected to street smartness and being able to, be a first principles thinker, being able to look around corners, being able to understand human beings and people and negotiations and all that stuff, how to motivate someone, learning how to sell, than it is the book smartness of what you traditionally learn in school.
Yeah, and the intellectual curiosity, which I guess led you into your kind of gaming bedroom empire at the very beginning, right?
Yeah, exactly.
So you had a couple of years in advertising, and then you created your first kind of tech company, Pay with a Tweet.
Mm-hmm.
Can you talk about how you came up with that idea? And actually, maybe you're a bit early with that, because it's kind of like the world of NFTs and Web3 and so on. It's probably come back full circle now.
I lied to call it a tech company because it was not really that in the beginning. It was literally just like a side project that was like, so like a buddy and I that I moved to the US with together as like a creative team. And we wrote this little book that was like in 2009 or something, 2010, something like that. And, but we were nobodies. No one knew us. And we kind of did it also just like get our thoughts on paper. And I don't know, we were like, oh, maybe we'll get some fame in the industry and, get a better job or some raise or whatever. Like there was a little bit like some self-promotion out of it. And so we were like, okay, so if that's the real goal, then, how would we visualize success here? And visualizing success in that moment would mean like Twitter was brand new, was just kind of taking off. So what if just everyone that is in this industry should just tweet about it? That would be amazing. And we're like, so what if we just do that? Like we'll give the bait, like we'll sell the book. You can buy it for money. But at the same time, let's just build this thing where you can download the digital version for free if you tweet about it, and you just like click a button, you submit this tweet, it redirects you to the download, pretty straightforward. And then we turned that into its own product, which was then called Pay with a Tweet, pretty obvious name in the end. And that just took off by itself. And then every major record label used it to give like songs away, or, tickets to concerts or conferences or ebooks, obviously. Mitt Romney used it to give away his jobs plan when he ran against Obama, and whatever that was. And so that just took off by itself. And then at some point, it was just this thing where like, this thing is clearly working. There's a ton of traffic on it. Do we quit our job and like run this as a company, turn this into a real startup? Do we let it just like sit and run and it will just have a slow death at some point? Or do we give it to someone to run it properly and see how big it can become or what else it can do with it? And then we talked to this kind of incubator in Germany that we had some connections to, and they essentially bought it. We kept a little bit of equity in it as well, and then they incorporated it, hired a team for it, put a CEO into place, and kind of tried to make it a company. And then that sold again at some point as well, and so on. And so that was like the first thing that was like a little bit of an exit. Everyone made a little bit of money, nothing to retire on in any regards, but it was like the first kind of experience into building a product from scratch, and some exposure also to just like concepts of venture capital and, selling and stuff like that.
But at that time, you had a full-time job as well.
I still had a full-time job at that time. Correct. Exactly.
And so what made you take the leap then to move into the startup world with and.co after that?
I always wanted to go back and start my own company. And it was just a question of when and where and so on. And I met the people I met Henrik, to be very straight, at Prehype, which was the founder of Prehype, also founder of Dogbox, if you may know, this subscription box for dog toys. And Prehype essentially was like a company builder incubator kind of thing, but it was pretty much more like this like little shitty office in Chinatown on Elder Street in New York, literally with this elevator where you walk in and there's like, like an old Chinese man sitting there who just like, has to operate the elevator because it doesn't have buttons, and so on. And the descriptions were like, if you feel like you're walking into a sweatshop, you're on the right track. and like, that was like the office, but it was amazing vibes. It was essentially just, a bunch of people together in this tiny office that just wanted to build stuff. And out of that came BarkBox. Out of that came Andco, my old company managed by Q, which was acquired for $300 million by WeWork. Out of it came essentially also Row, that healthcare company. And also there, Yannick and I met, my co-founder now in public. And so either directly out of it or associated to it by the people you met and whatnot, like a lot of actually quite awesome, great companies and founders came out of it. So I would say from like a ratio of track record, I think it was really, really high compared to, many other incubators and accelerators that I know. I met Henrik, and then we did this little handshake deal where it was like, hey, he's going to help me to get some cash flow with some like consulting jobs, so I just like can pay the rent and whatnot. That had literally, my son was born 6 months before that and whatnot. Wife didn't work, and so I was just like burning through my savings. And then I started Andco out of Prehype, which was essentially like, we call it freelancing software, like a SaaS tool for freelancers, invoicing, payments, contracts, task management, that kind of stuff. And then, 4 years in or so, we sold that to Fiverr, the freelance marketplace out of Tel Aviv.
And then, so at what point did you decide then to go from freelancing kind of gig economy platform into setting up a fintech company? That's quite a different direction.
Yannick, my co-founder, was in fintech / specifically trading his entire career. And so like he was much deeper on that topic than I was. And he sold his company, I sold my company. We were both in this like limbo mode of like what to do next. I was setting up my earnout at Fiverr, and he moved to New York. I was already in New York, and then it was a little bit like what to do next. And I think like the one of the main things that we saw was that in our space, that first generation of investing platforms was very heavily focused on speculation. And so that next generation's Schwab was not really built yet. And it was much more the next generation's E-Trade, so to say. It was heavily options trading, Robinhood and Co., or, CFD trading in Europe, which you could argue is even more risky, or, pure play crypto trading platforms. And so it was all like very speculative and so on. And we just saw this opening to build something that just was more serious, was more focused on proper investing. And that's essentially where, that opportunity that we saw to build public for.
So can you talk about then the difference between investing and trading? Because I think a lot of young people don't appreciate what investing is. And they think about trading as, I'm going to trade some crypto and make loads of money really quickly. And there's a lot of, I think, misinformation out there as well around trading, and it can be pretty dangerous if you don't know what you're doing. Whereas investing is for the long term, it's very different. Can you talk about your perspective on that and what you're trying to highlight to people who are going to use your platform in particular and around investing versus trading?
Yeah. And I like you saying like your perspective, because I'm sure everyone will have their own take on it and definitions and how they would describe it. I would argue investing has a longer time horizon. It doesn't mean you will hold it forever, but it has a longer time horizon. It means you are you have an understanding of what you put your money into. You have an understanding of what that asset is. You have an understanding of potentially the company behind it, what it does, potentially the financials, etc. And you're essentially trying to compound your money over time. And and therefore also you think of your portfolio as something that you primarily add money to versus take money from for living and whatever, right? And so that's how I would define investing, where like you want to build your portfolio up and you want to compound it over time to potentially at some point get to a point where the money you've accumulated, can generate enough cash flow for your retirement or whatever it might be. Everyone will have their own goals there, of course, right? But that's not what define it. Whereas in trading, you essentially trade in and out of the same balance that you're trying to grow. And it's obviously way more short term. You might do it day by day. You might do it week by week, but it's much more short term. And essentially, where in investing, you are much more focused on fundamentals of the asset. In trading, you also very much are looking at the market itself. And so, you might play things like earnings calls. You might play things like, Fed announcements or, announcements on certain tariffs that might be happening again, or so on. And so there's other forces that impact the markets short term that you have to deal with if you're trading in and out in short periods of time, versus if you're in investing and long term, you're generally speaking trying to find great companies, great assets to own for a longer period of time. And if there's fluctuations in the market due to political decisions or whatever, that should matter way less because you're aiming to hold these things throughout those periods anyway.
Yeah. So case in point, what's going on in the markets at the moment, right?
Yeah, exactly. I mean, we see when markets dip like they've done through the, tariff policies that have been announced and so on, we usually have great days. And that's kind of the behavior we're seeing on public. Again, a little more focus on investing over trading, even though you can always do both. But is that when markets dip, deposits come. And people and retail generally tends to have this behavior, especially on public, this behavior of buying the dip. And so they have some cash on the sidelines, either in their high yield cash accounts or in their bond or treasury accounts and so on. And then when the market conditions change and companies seem to look cheaper than they were maybe a few weeks ago, then people start to buy up the companies that they believe in. And that behavior we see again and again and again and again, this like dip buying. And, it's easy to kind of sometimes look at it a little bit as like, is retail just buying the dip because it's dipping, but do they really know what they're doing or whatever? But again, if you're holding for a long period of time and you believe in the company for years out, that can obviously be a strategy for some people.
And it's on public.com. Can you invest in anything that's tradable?
Yeah, so US focused still. We have some international stocks as well through ADRs, but generally speaking, it's, stocks, ETFs, corporate bonds, US treasuries, options, crypto. And then we have a few other instruments like investment plans where you can like create your own recurring kind of strategies you can invest into. We have these things called, bond account and treasury account, where we essentially simplify the experience on how to invest into bonds and treasuries down to a behavior that is more, similar to having like a savings account or so, where it's just you deposit money, it automatically gets invested into these bonds, and you earn your yield. And that's kind of it. And so, which just simplifies the way to invest in bonds, which either helps people to, potentially get into some higher yields, obviously also with a little bit more risk by going to some corporate bonds or so on, or locking in their yields because, high yield cash accounts and, savings accounts, the yield you're getting on your cash is variable. So if interest rates gets cut, you will also make less yield. But, if you own a bond, then a bond is, let's say, as a, 5-year maturity, that means for those 5 years, you have your yield obviously guaranteed as you hold that bond to maturity and such like that. And so these bond accounts also help people to like more easily to kind of lock in yields right now as the yields are still pretty high.
And so what makes public.com unique compared to kind of other platforms out there?
Yeah, I mean, generally speaking, we are focused on people who take investing a little bit more seriously. And so there's a lot of work that we've done to enable people to have a more fundamental view on their investing, right? So we have pretty deep insights on fundamentals of companies in terms of, their finances, their custom company KPIs. If you go to Tesla, you can even see how many cars have they shipped, things like that. And then we have this wrapper we call Alpha, which is like our AI layer wrapped around that, where number one, you can just swipe down on any stock and ask any question about the stock, but also it gives you like proactive insights, where if there's an earnings call, it will give you a recap on the earnings call, puts it in your inbox literally the minute they hang up the call. If stock is moving in either direction drastically on a day, we'll put a card on the stock page that will tell you like, why is the stock moving right now, not just that it is moving. And so like it creates all this context around it that is always driven by, the fundamentals of the company or the insights that are happening around the markets, around these assets that you own or want to own or watch or so on. So we're doing a lot of work there. The other things are just things like, we've done a lot of work on things like tax lots. Like if you're serious about your investing, you'll care about your taxes and being able to manage that well, stuff like that.
If we take a kind of a change of direction into the journey that you've had since you started public.com that was pre-COVID, you've got yourself and Yannick, so you've got co-CEOs. Can you talk about the journey as you kicked off and then COVID happened, which was probably quite a lot of fun. But also, having co-CEOs is not incredibly common. Can you talk about how that works in practice and kind of how, I suppose, how you can work together to be, the two of you together is actually even better than, two of you individually. Can you talk through kind of the style of how you approach problems and challenges and tackle them?
Yeah. I mean, Yannick and I essentially have the company, the company's reports are kind of split, and he has his direct reports, I have my direct reports. And so the day-to-day is very clear. And then the larger strategic decisions we essentially do together. I think it helps a lot to have someone that experiences everything exactly like you do, has the exact same incentives, same ownership even, et cetera, because it creates a lot of balanced decision making. We're all human beings. We'll all have a stressful day. We'll all have shit going on in our personal lives here and there. And emotional decisions can happen. And I think by having someone that is literally on the same level as you are, it helps to balance decisions much better. And I think that is an incredibly valuable thing. I always say I think it will be hard for me to be a solo founder likely, because I value that type of, balanced decision making and like having just like a sparring partner for these things a lot. I think that is one of the like big major things. And then generally speaking, I think like it's more unusual in the US. I think it's fairly usual in Europe. Like having, in Germany, able to like a Geschäftsführer, like having multiple, kind of like managing directors, so to say, in certain companies is like pretty damn normal. And, I think the biggest thing with this stuff is always to make sure that not every decision in the day-to-day has to be done by two people that have to align first. And that's, and that the day-to-day can have very quick decision making by people having very clear responsibilities. And that's how we've kind of structured the company for ourselves. So far, so good.
And how have you dealt with, and what are the obstacles, and how have you overcome the kind of the rapid growth that you've had in terms of probably, you've obviously raised a lot of money, hiring people, onboarding loads of clients. What was there any kind of key moments in that journey of scaling up?
Yeah, I mean, multiple. Obviously, we had a few moments of just like crazy growth that happened, like GameStop in 2021, or even when, even in the very early days when the circuit breaker hit multiple times in March 2020, and, suddenly people just came in and deposited a ton of money and so on. And those moments are stressful, but they're also fun, obviously, because that's where the company is built, and that's when everyone who works there gets their memories for the rest of their life, and so on, of like being in those companies at those moments in time. It's just fucking awesome, let's be honest. And it's just fun. Then I think there's like the growing pain stuff of, we raised $220 million when we were 45 people or something, and 18 months after launch. that was a lot of money very quickly at a very small size. And we went into this mode of, let's build the company, like what does the org chart look like? And, middle management, blah, blah, blah. And I think we got distracted on a lot of shit there. And we've learned out of that. Now we're trying to run the company with as little process as possible. And we also have this little principle of at Public, every manager is also an IC. And so no manager is a pure people manager that just has one-on-ones and whatnot. Everyone is hands-on keys and everyone writes code, copy, design, whatever needs to be done. And in that, also trying to keep the company as lean as possible. And I would say throughout 2021, we grew the company to like 190 people or something. Now we're down to 130, call it 35 maybe. We ship more product. We grow faster. Everyone generally is happier. The conversations in the company are all about the business success of the company, not, someone nerding out about the next Scrum or whatever, And that has been great. That has been great. And so I think there was a lot of learnings throughout that 2021 time where money was free and everyone was high. I think especially the last, I would say 2.5 years have been awesome because it's just super focused, super lean team. And there's just no bullshit in your day to day. It's great.
So it sounds like the people that work at public.com, they're owners. They got extreme ownership of everything they're doing and have the autonomy as well. How therefore, when you're going out hiring, what are the things the attributes that you look for?
We try to find the scrappy, street smart people who generally can figure anything out. And in most cases, if you look at those people's resumes, you will not recognize anything major. And you will not look at that resume necessarily and be like, oh my God, yeah, this person must be amazing. I would say likely all of our top performers in this company, making the brand statement right now, maybe there's one or two that I'm wrong about, are not coming from great logo companies before they're here. And I think it's about finding these, I don't call it diamonds in the rough because they're incredible talents and they are that already. But they had to work for their success, and that's why these people are good. I had a good example of we were hiring like a head of growth and so on. And when I was working with the recruiter, I described it as, watch out for the logos, because if someone comes from a greatly successful company, it doesn't necessarily mean that they are responsible for their success. And very likely in their day to day, it was easy. It was easy for them because this company already had some viral moment, or they already gone on some slope and the machine is running now and it's going, if you were, were in Airbnb for a long time, for example, chances are Airbnb would have been successful without you as well, And the way I described it was I wanted to be find people that had to work for their growth. They had to fight for their growth. It was not handed to them because of some viral moment. It was not handed to them because the company was already successful or whatever, but they had to work for their growth. And so we looked at people that came from ticketing startups, of highly competitive space, super undifferentiated product. And nevertheless, they have to figure out how to acquire customers. And people like that had to go through the grind, figure shit out where, the wind is not in their sails, but it just blows in their face all day long. Those are the people that had the experiences that actually know how to do things. Because they had to work for their growth, they had to fight for their growth. And so those are the like areas or the situations where we're trying to find people, of people that had these types of experiences and grew up in those environments. And those, I would say, generally do very well. Generally, I think they're great talents usually, but I also say that specifically at public, those people will do well. And, we use that as a little hiring guide in our internal notes. And I literally wrote this line of like, beware of the badge hunters. Well, it's like, beware of these people that I mentioned earlier of like, come from Stanford, and then I went to Google, and then I went to Meta, and then I went to Stripe, and blah, 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 because chances are these people are first not motivated by actually building successful companies. They're motivated by building their own resumes. And, you might see them having, profile pictures on LinkedIn where they are with a microphone in their hand, sitting on some meetup or something, and we want to avoid those people as much as possible. And so the scrappy people that had to really work for their growth and, have actual successes to show that they're responsible for with their own bare hands.
As a young person who might be listening to this podcast, what else would you look for if they're early in their career and they don't have much of a scrappiness in terms of the companies they might have worked for? What stuff would you look for outside of work that might be on their CV or resume?
I mean, side projects is always a good example. I think when, I like seeing when people have side projects, because it also means they have a little bit of a 0 to 1 mindset of like being able to like build something from scratch, figure something out from scratch. And with that, I don't mean the people that like create the industry leadership group that like meets once a month and they feel good about sitting on a Zoom call together. Like not that, but like making something, from scratch, side project, like that kind of stuff I think is always a great sign. But other than that, I would always be like, I think you learn a ton if you're in an early stage startup, especially I would say like Series A plus, where, there's a little bit figured out already, and there's you're a little bit surrounded by a few people at least that maybe have done it before somewhere else already. So not just pure people that are all figuring it out together from scratch for the first time. I think that's where you can learn a lot. And it's like Series A type of stage. And so doing that early on in your career, I think is immensely, immensely valuable.
Have you had any mentors in your career?
Yeah, I mean, like Henrik Rödlin, the guy who from Prehype and BarkBox, like he definitely was. And then I would say it's other founders. Like, my buddy Salman, who runs Row, who also met many years before Prehype, who also was at Prehype for some time. He, for example, always has been like, with his companies, he has always been like, call it like 3 years ahead or so, of like scaling and size and whatnot. And so it's always good to have people like that, are a little bit ahead of you, but they've kind of been through these things you've been through already. And you're kind of on a similar level, even though they're a little bit more further out already. I think that stuff is super valuable as well.
I'm just looking at, because obviously you've built now this super lean, super effective team. You're setting yourself up for more success as you're going forward with Republic.com. What do you see as kind of the main trends in terms of technology or markets or different asset classes and so on? What are the trends that you're kind of seeing that you're looking to kind of bring customers into the platform?
As cliche as it fucking sounds, AI. If you look at our space specifically, it has always been a binary space. If you go to Schwab's website right now, you will basically see two offerings: either self-directed, you do it yourself, tables and charts and buy buttons on a platform, or you have someone doing it for you, aka financial advisor managing your portfolio. And that's literally how even the regulatory framework in the US is kind of defined, and so our world has always been this binary world. Now we look at it more as a spectrum. And so, and if you look at it as a spectrum, then in the middle of that, you would have what I would call guided investing, where it's like, you're not fully doing it yourself. It's also not done fully for you. And so it's more like you and the platform are kind of sparring, and figuring things out together. And an impulse can come from you, an impulse can come from the platform. You can send an impulse and the platform takes it from there and builds something out of it or whatever it might be. And I think that's where we see a lot of the future happening, because this generation of investors just acquired financial literacy way earlier in their lives. And therefore, they're much more confident in their abilities as investors. And so they are more self-directed because of that, just by default. And so they're not just going to give up all their power to some financial advisor and be like, cool, now you do everything for me. And so this kind of duality of parts of your portfolios are managed, or you're kind of playing with the system and you're kind of having this, sparring partner, is something where technology, and specifically AI, I think will do a lot. And so I think it will fill up the spectrum much more, where it's not just this binary world of either or, but you're much more fluid between the two. And, a platform like Public, obviously, which we're building, is much more of a sparring partner than just, a UI interface where you execute, or a human being that does everything for you.
And how do you see, so if I'm a graduate, I'm like 20 years old, I'm looking at, you're in 2025 now, so 5 years time is going to be kind of a new decade. What kind of technology trends do you see going forward, whereby if I'm a young person now, I can start learning and understanding some of these things, so I'm in the right place at the right time in 3 years time when this thing takes off? In the world of kind of investing and trading, are there any key things that people could be looking out for or thinking about?
I wouldn't tell you because I want to build them. Yeah, I don't know. I don't know if I have a great answer to that I can share. Markets wise, I would argue that the way the world is shifting right now, other international markets will play a larger role. The US stock market has always been like the best money-making machine that might have been ever invented, and it's always been the most liquid markets. And, every major company in the world wants to IPO in the US because of all that. And if the trend from the last, call it 4 months or so, continues, I would argue that more international markets will start to, just like gain more, I don't know, dominance, but like gain more like relevancy again. And I think that can open opportunities for investing, that can open opportunities for companies in these markets, and so on.
Do you think human investors and traders are always going to be able to compete, like as we go forward in time?
I think you will always find dislocations in the market if you do the research and, I don't want to say know where to look, but if you do the research, you will always find something somewhere. The market is too vast, and it's too vast and too complicated, but too diverse for that not to happen. And you might not be the only one who figures that out, obviously, but I think there's always going to be something somewhere. And then you could argue that, and even if not, and just everything is perfectly priced and there's no dislocation anywhere or whatever, then you're still falling back on, for example, in the US, do you believe in the growth of the US economy and US businesses? And as long as the answer is yes to that, you should continue to see growth in your portfolios. No financial advice.
So to finish off, what advice would you give young people who are kind of starting out this journey now? Like you've mentioned about being street smart is a really valuable skill and attribute to have. And it's not you and public.com, you're not so concerned about logos and company names. You're looking for that scrappiness and people that think and work in a particular way. And it doesn't really matter what your background is. You kind of mentioned that as a key thing. Is there anything else you want to add to that as kind of good advice for people starting out, particularly young people that think that they need to, because the way the education system is, you kind of get more specialized as you move up the the rank of different types of degrees and what have you, which means by the time you graduate, you think you need to be, getting on a grad program, and if you don't, you're a failure. Whereas you very much said that's not the case, and I agree. Is there anything else you want to add to that for people who might not be going to those prestigious places?
Right.
And you think that they should.
It sounds cliche, and I don't want to sound like the grumpy old guy who is complaining about younger generations, like every older generation always does. But show up, work your fucking ass off, ask for more work before you ask for more money and whatnot. And one thing that has always done well for me is that when I was early in my career, I was always one of the, if not the hardest working person there. And that just comes with putting in the hours. And the number of literal all-nighters where you sleep for 2 hours on a chair in the office and weekends that I work through and whatnot, I do believe have, number one, hardened me to some extent in terms of what I can endure, in terms of pain in my professional life, but it also has helped me be successful early on, because there will always be someone who is more talented or smarter, but you can always outwork them. And I have to say, I don't know how true that is anymore right now all the time or not true, it's still true, but like how many people still take that serious. And I literally was sitting in an interview a few weeks ago where we suddenly, in the interview, the candidate was starting to discuss, literally starting a discussion on what their expectations are on weekend work. And I'm a little bit first off, I'm not someone who forces people to the office on the weekend. No, and not saying that it happens here all the time, but where I'm a little bit okay, if that is not what you want to do, that's completely fine. Don't apply it at tech startups. Don't apply at growth companies, in that moment. Just be aware of that. And if you do, put in the hours and find the joy in that and whatnot. But you gotta, especially in the early days, you gotta show up, you gotta work your ass off and whatnot. Also because other people will see it. That's how your network will grow. People will point back at you. If you get another job offer at some point or whatever, or, an angel check into a company you will build, all that will come from the reputation that you've built of how other people perceive you. And a lot of that comes from showing up and for them to perceive you as someone who is great to work with, who is super hardworking, who doesn't say no, who takes on work, without questions asked, etc. And I think just teaching yourself to embracing the pain and the hours and whatnot, is, I think, one of the core pieces of success, especially early in your career.
Great advice. How can people follow you? Hear from you, and then any other places that you might, are you on social media, on Twitter and LinkedIn and so on?
Yeah, on Twitter/X, just do Leif Thunder, Leif Thunder. There's a whole story to the Thunder. It's for a different podcast, but that's the best. Once in a while I actually send a tweet, but that's always the best. Also, DMs are open. If anyone wants to reach out, you can just hit the DM button there as well.
Yeah, so Leif Abraham, thank you very much.
Cool. Thank you.